Hi guys, so let's have a look at the statement of comprehensive income. Now you may see this referred to as profit and loss account, so it can also be known as that, but certainly as far as your exam goes, that's how you need to get to know this, okay? Right, so what do you have on here? Well, crucially, you've got the sales revenue. This is the top line figure, as you can see, that I've drawn out on this very, very simple statement of comprehensive income here. So our top line figure is the income that's actually earned through sales. So this is sales revenue. It's calculated by the price of the goods times the actual quantity sold of those goods. So here we can see that £31,000 worth of sales revenue has been generated. Okay, so that's what the business has in terms of their actual sales revenue. Now, meanwhile, we can see the cost of the goods sold. Well, what does this refer to? Really, when it comes to cost of goods sold, this is a direct cost of production. It is a direct cost, and as such it really does refer to stock purchases and raw materials. Okay, so stock, raw materials will be prime examples of calculating your cost of goods sold. Now we'll look at this calculation in our next lesson when we break this down into a little bit more detail, okay? But we just wanted to introduce a nice introduction and chunk this information down quite nicely here. But we can see it's calculated by your opening inventories. Opening inventories are the stocks that you already have, or the other word for stock, of course, is inventory, plus the purchases that you make over this given period. And for statements of comprehensive income, you're looking for an annual period in most circumstances, although it can be quarterly. For your purposes, it's likely to be annual though. Okay, and you can see that I've referred to 2017, 2018 here. And then you subtract whatever closing inventories you have at the end of that trading year. So that will then go on to opening inventories in the next period. Okay, so that's the really significant part about cost of goods sold. Then we've got gross profit. So gross profit is the sales revenue minus the cost of goods sold. So let's now just have a look at calculating these missing figures that we've got. If you already know how to do this, or you want to give it a go now, you can stop the video now and just complete these gross profit figures. Okay, anyway, let's get these done. So 31,000 minus the cost of goods sold, well, that takes that down to, of course, 20,000. Okay, so we can put that in 20,000. Meanwhile, we can see the sales revenue here is missing. Okay, but we do have the cost of goods sold, and we do have the gross profit figure. So therefore, we've got this element, we've got, but we have, we've got this one, but we don't have this one. So that obviously tells us, okay, not quite the right way around, but anyway, you get what I mean. We're missing this one, okay, which is of course our sales revenue. So how do we get that? Well, we've just got to make sure that we add those two together. If we add those two together, that will give us the total amount, of course, and so in this case it will be 37,000. all right, apologies for that mistake, I made that. So that will be 37,000. okay, so again, hopefully that really does show you how quite straightforward this information actually is. Okay, now when we come down to expenses, well, as opposed to direct costs, which are directly involved in the production of those goods and services, okay, these are going to be indirect costs. So these will be indirect costs, and examples of indirect costs might be paying your rent, paying your electricity or utilities. It could be gas and electric and heating, it could be lighting, it could be marketing costs, it could be simple administration costs as well as salaries. So those are all examples of indirect costs, and they are referred to more generally as expenses. And those prime examples of expenses that we've got there, yeah, utilities, okay, we've got rent, we've got salaries, okay, and so on. Right, so let's now move it on to have a look at profit or loss for the year. So this is simply your gross profit minus your expenses plus other income. In this case, this other income, this could be that you have savings elsewhere which are earning income for the business, and therefore it wouldn't be a form of sales revenue, but it would be a form of other income, and that would also be included. And we'll look at more complicated statements of comprehensive income later on. So anyway, let's just round this off. So we can see 20,000 minus 9,500. Well, what does this tell us we're going to have? Well, it tells us our overall profit for the year is, of course, going to be 10,500 there. Okay, and here we can see the expenses amount is missing. Okay, but we can see that there is a differential there. Okay, between 24,000 and we end up with 12,500. So what there is the difference? Well, the difference, of course, must be 11,500. Right, so that's really a nice straightforward start, I hope, in terms of actually understanding exactly what we've got here. Okay, right, we'll see you next lesson. Thanks, guys.